our weekly multifamily live stream. I'm Bill Gross, the LAProbate expert. And today we want to try to talk about ways to help you make sure you're going to make a great investment, build your income and your net worth through multifamily investing. And hopefully by the end of this call today, you'll have a little firmer sense on where the market is and why I think multifamily is such a great opportunity for making money as an investor, as a wholesaler, or as a real estate agent. So we do this every Wednesday at 2 p.m. Pacific, 5 p.m. Eastern time. We live stream it on YouTube and Facebook. We'd love to have you come into the Zoom if you're interested. And you can register there for the call and participate live and ask questions. Love it to be participative. Love to have you ask questions. Feel free to raise your hand on the Zoom application or type a question in the chat box if you're on YouTube or Facebook live as well. I try to check those messages as well and we'll answer them. And even if it's after when it's on recording, I'll go back and answer those questions. So feel free to participate. So, and if you also in the chat box would be so kind, so make sure I know who we're talking to, put in the chat box what your basic title is. If you're an investor or a wholesaler or an agent, of course, many of us are multiple. I'm a real estate agent. I also invest. I also do an occasional flip. But my basic everyday business is to be a real estate agent. So I'm always looking for properties to list and sell as an agent. And in the course of doing that, I find good investments, I find good flips. But how about you? What's your primary occupation? Are you an investor, wholesaler, real estate agent? Put that in the chat box. And also put what city and state you're in. That way we can network. If you put your contact info, we can network together. If we come across good deals or you want to follow up with somebody, love to have you participate as well. So we just talked to Stephanie. She's a wholesaler in the East Bay of California, Oakland, California area. And EJ, welcome, investor and wholesaler. Very good. And EJ, where do you do your investing and wholesaling? Go put that in. And again, if you guys will put in your phone numbers and emails, if a property to pitch, feel free to put that in. The goal here is to be participative. So what I wanted to do today was, and we have a series of great speakers lined up over the next few weeks. And generally we do an interview series on this call where we interview somebody who's experienced and we'll share either a project or share a system that you can jump into if you're interested in doing that. Today, before we launched into that, I thought I would share with you guys a great resource that I use to help me stay in touch with the market. You know, when we are trying to sell customers on investments, when we're trying to attract customers, one of the things we need is good information. People will do business with an expert. They'll do business with somebody who has certainty. They'll do business with somebody who has some clarity. And they'll also do business with somebody who's a resource to them. And so you want to be that person. You want to be that expert or resource to people to help them in their multifamily journey. And so one of the great resources I want to share with you today is a great resource of learning and information that I would recommend to everybody. And I also would say that there's both a free and a membership. And the free program is fantastic. And so I'd recommend that. It's the National National Multifamily Housing Council, or the NMHC.org. It's an organization that is focused in the space of multifamily housing. Great statistics, great information. I think their meetings are probably a little more corporate than most people on this call. They're a little more oriented towards managers and corporate executives of investment companies and big vendors and things like that. But they are a great resource of information. So I thought today I might walk through some of those resources. You can see I've opened up, this is their main page, right? And they do a lot with Washington, D.C. and a lot of lobbying and political stuff and all that. But when you click on the research, they have some great quick facts. If you're looking to build out your presentation on your project, or you're talking to an investor, or you want to decide if you want to invest yourself or not, or you want to post social media to attract investors to your business, this is a fantastic resource. I'd like to walk you through some of the key things I think you'll find to be helpful. So resident demographics, 36% of renters live in apartments as opposed to homes. That's 43 million households, and about 5.7 million of those households are single women. Kind of interesting factoids. And these are kind of things that you can share with your in your market information if it's important, or share in your social media. You can see that what type of structure do they live in? More single family than either 2 to 4 units or multifamily are residents. And then you can see a few more households are in apartments. And there's a small number that's in mobile homes. It's still significant and other. And so you can see that households, which you can have more single people here, more families by numbers of people here. So families skew a little bit more towards single family homes, but not so much. Over 33% of all households are in single family homes. And you can see way more are in 5 units and up. So that tells you who's in these properties, number of vehicles per, and you can just see why it's important. Some don't need any car. Most have either 0 or 1 car. Only a small percentage, 20%, have 2 or more cars. And that's apartments versus all households. So you can see that parking is an important statistic. But again, when you want to compare your project to the national market numbers, this is a good resource for that. Living arrangement in terms of single male, single female. You can see what the breakdown is, single parents and such. How many members are in the household? And this, of course, gets down to the makeup of a project. 1 person, 2 people in apartments versus all households. You can see that more single people are in apartments than overall. And here 2 members, even still, more 2 members are in all households than are in apartments. So apartments skews more towards single people, obviously. And so that's why when a facility considers amenities, that they want to orient them towards single people. It's a whole nother list of other statistical areas I think are fascinating. Transportation to work I thought was interesting. How many people take cars? Still less than 20% work at home. And then way smaller yet use subway or walking. This is national statistics. So the vast majority are taking a car or truck or motorcycle or taxi, shared car to work. And you can see in terms of all households, more use cars, but still even rentals primarily. So the idea of creating an apartment building with no cars for transportation, I mean, I guess it can work, but certainly you're swimming upstream. You're not going with the market norm. Commute time, less than 30 minutes, by far the most dominant. And the thing that I always wonder when I look at this mark, and then you have how many are an hour and how many more than an hour, or how many of these people lived close to work and then changed jobs. Like I had friends who lived in Burbank and worked in Burbank, and then they got relocated to Playa Vista. So they had an hour drive, but that's because their job moved. So people tend to choose to live within 30 minutes. So when we do our analysis of important employers, we'd want to stay within a 30-minute cycle or circle. How many telecommute? And again, this is yes and no, but this is people who can do it 1 day a week. Doesn't mean they do it 5 days a week or every day. And more, I can just tell you from working with my daughter and son-in-law, more and more companies are looking for a blend between the two. I'm moving in that direction. How often? Every day, about 45%. Several days a week, about 30%. Once a week, 10%. So you can see majority of them evenly split every day versus a couple of days a week. Now that's overall information. And then if you get to specifically like the apartment stock, here's an interesting factor I saw. You can see that the gray or the darker are more numbers. Of course, California is the most populous state, followed by New York. So you expect them to have the most. Texas probably next. Florida's probably next. But you can, if you look at the numbers, say in California, we have 2.9 million apartment units, almost 3 million. And you can select these 3 states. I'm going to compare something for you real quick. California has 3 million. These 3 states, Colorado, Nevada, and Arizona, have 435, 144, puts you about 570, let's say 600, puts you about 800. So this is about 800 versus 3 million, or about a quarter. Watch what's happening in the construction, though. Let me get to that. That's the current stock. Take a look at this. There's a particular graph I wanted to show you that to me was fascinating. Let's see. where was the, oh, here we go. Starts and completions by state. They had these numbers laid out. Oh. No. So again, now the new apartment construction, remember we said California had currently about 3 million, and you have 49,000 under construction. Remember, these three states are about a quarter of that. But here you can see Arizona 17,000, 13,000, and about 6,000. So you have about 36,000 in these three states and 49,000 in California. You have almost as much, or 75%, not a quarter, but about 3/4 in these three states. So these three states are building a lot more apartments per person than California. Anybody want to guess why that is? Because people are moving from California to these three states, not the other way around, right? And then you see Texas has almost 80,000 units in construction. California has about 50,000 with a much bigger population. But you also can see that how much California needs. We all know we don't have enough housing in California. And for all the talk about overbuilding perhaps in Texas, it's not that much more than California. And then Florida building 59,000, which is even more than California. So you can see that these states are growing very rapidly. California still has quite a bit of building. I think the common fact right here is that California takes longer to build than these other states. The other thing I wanted to share with you, I thought was really interesting, was the total annual returns. So this is the value of apartment stock. Of course, you're adding in new building, you're destroying old buildings, and current ones are being depreciated in value. But look at the annual returns. Now, this is the pandemic is starting like right here. So pre-pandemic, you can see that just like interest rates were coming down, so were the returns on apartments down to about 5.5%. And since the pandemic, you can see the returns have jumped up to 20%. That's definitely due for a correction. But pre-pandemic levels would put you back about 6 or 7% returns, which are, depends on where you are as an investor, but pretty solid returns. So we have a long way for the returns to drop before they become unattractive to investors, to getting back to pre-pandemic levels. This is a real estate investment trust. It's a form of investing. It's kind of like a stock market entity that buys property. One of my favorite REITs, my brother-in-law is actually the co-president of Rexford Industrial. Their company, it's NASDAQ traded, where they collect money and they buy only industrial properties in Southern California, fix them up and lease them. So that's a REIT. That's a format of a REIT. So there's REITs for public storage. There's REITs for multifamily. There's REITs for single-family housing rentals. There's REITs for all kinds of product. So the black are regular REITs, and the orange is real estate. And you can see where black is higher than orange. It tells you that the regular REITs or other forms of real estate were more attractive than multifamily. But you can see here that REIT versus multifamily, REIT versus multifamily. Now, 2016 started to turn the other way. These other REITs were doing much better. And that's corrected, about the same. Pandemic era, both dropped. Post-pandemic, multifamily has been the star of the show in 2021 by far. If you invested in a REIT, multifamily, what happens is you have a percentage of the future profits of these properties that you're buying. But my point is just to say that there's several ways to buy property. One way to buy low risk in small amounts is to invest in a REIT. And I'm not here touting it. I don't do investments for stocks and bonds, but you can go on to TD Ameritrade, or you can go into Vanguard. You can buy $1,000 worth or $500 worth of Rexford Industrials. One I have, public storage. There's other REITs you can invest in. Then invest in multifamily, and that's another place that people invest in. The capitalization rate for properties is the rate of return on the capital, and you can see that overall, the 10-year note is considered the baseline of what America's debt will pay. It's considered safe. And you can see that for multifamily apartments, that their capitalization rate has consistently been above the T-bill rate, 5.5 versus 2.9, about 2.5% premium. So it's a very secure investment considered in the long run based on the historical standards. So I think all of this is a factor for, or factors that argue for um, continued investment in this space. And then lastly is new construction. You can see the price indices of things that go into multifamily rising. And here's the individual components. I think this is why when you buy a multifamily building, it's going to have to go up in price in the long run, because the price went up, but what happened was you're buying lumber, and lumber is more valuable now. You're buying some steel went up in price. You're buying copper went up in price. So while the property goes up in price, so do the underlying value of the physical structure. Now, the advantage as an owner is you get to depreciate the improvements. So some tax advantages to it. But this I think, some compelling reasons. You can see, now you can see also that softwood lumber is a type of lumber that's used like 2x4s and such. You can see how, if you remember during the pandemic, how it spiked so much and then dropped, spiked again and is dropping, but overall it's been rising up. Kind of like gasoline. It has had some spikes, very volatile, but much higher than it was before the pandemic period started. And it was down here, actually down here. So it went from 200 to 455 for a yard foot of lumber. So again, I think these are factors. And then distribution of new apartments, you can see California has built plenty. Of course, we're a big state. We had 50,000 units in 2021. Texas added 80,000. And Florida added 59,000. But when people talk about the overbuilding, you can see, to me, I was surprised at the narrowness of the difference between California adding 50,000 and Texas adding 80,000. I would think the difference would have been bigger in Texas, but not so. Starts and completions. So completions and starts, the difference between them is always a risk factor. So you first pull a permit, then you start the construction, then you finish. So you can see that traditionally those numbers spread out. Now what happened was there's a period of time when we were finishing them, but we weren't adding in new stock. And then all of a sudden we've been, as makes sense, starting more projects we finish. Not all projects get done, so you wouldn't expect that. And then the completions have slowed down a bit while the permits have continued to go up and the starts have continued to go up. The completions aren't. So it's taking longer, costs are up. We can see that there's increased demand that's unmet. And I think that's the thing that most people look at. There's a whole world of low-income housing and different governmental programs. And frankly, that's a specialization I just don't know much about. So I don't want to venture into an area that I can't really add any value in. Okay, now I know I covered a lot. I wasn't watching the chat box. Let me just see real quick. A lot of you guys are sharing your contact info. Thank you. And good. And good. Okay, so a lot of good. Looks to me, I just see a lot of people sharing. I don't see any questions that I missed. Did I miss anybody's questions? Patricia, is that you raising your hand?
Yeah, I have a question.
What's up?
So as far as the REITs are concerned, how long would it take to see, your investment basically growing, paying off? I mean, how long is it? You said you have invested into the REIT for Rexford. So what has been your success with that so far?
Well, and again, just to be clear, I'm not a stock picker guy. I'm not a financial planner. It's not my specialty. And again, full disclosure, my sister's husband is a co-president of this company. Very successful guy, very smart guy. But you can see that in the last few years, they went public, I want to say 2017 or so, and at $30 a share. And today it's selling for 62, 64, 5 yesterday. So it's down a little bit, plus 32 for the year, I guess. Okay, so it's at 62. So, I think over time it's gone up. It has a dividend of 2.03%, which means that even if the stock stays the same, you get a 2% return on your money. That's because these are assets that are being rented. They're getting positive cash flow, and they're giving that back to investors, and then they still have enough money to go out and make new acquisitions. And I got to tell you, it's, getting dividends is nice. I have to tell you, I like you, Patricia, I'm an agent with eXp Realty.
Mhm.
And just the stock that I would have paid to my old company, I used to work at Century 21 Keller Williams. We paid 5 and 8% to the company. As you know, at eXp, we had a chance to buy stock with that money instead for ourselves. That stock that I've bought over time, and got stock awards for other things, I got $75 last quarter. I get $20 a month in my savings account of dividends. Now, I don't write home about that money. I don't take a vacation on that money, but I get $25 a month. That's kind of like a free, I don't know, something, a free Hulu account or free lunch, whatever it is. I'd rather have it than go to Century 21 or Keller Williams, right?
Sure, especially with the rising costs of, gas, products, groceries. I mean, you can put that $25 to good use.
So you can see that in the course of 5 years, it about doubled in price, right? About 25% annualized return. And then along the way, getting a dividend rate of 2% on top of that. So it's been a nice investment. Nice thought. Now, they're not all like this. You can look at public. Oops. I tried to get a stock picker kind of guy or gal on this call for a while now. So here's Public Storage. So of course, all companies over 1 year look difficult, but same thing. 5 years ago, in 2017 was at 205, and today is at 330. So it went up 50%, and its dividend yield of 2.4. So it's like getting 2.4% interest, while your stock over a 5-year period maybe went up 50%. So 50% divided by 5, maybe 10% per year, plus 2%, you got about 12% return. And while those numbers don't sound like the fabulous, fancy flipping profits you might get, this is more suitable for part of your investment portfolio. For me personally, my business is pretty, well, it's pretty wild, right? When they have a deal, next day falls out of escrow, next day it's back in, it's going to close.
Right.
So my investments need to be more cash flow and more conservative, just the nature of my business. Plus, I have a lot of stock in eXp, so I'm very heavily oriented in real estate. So for me to buy properties and flip them, I just don't have the time or energy to do it. This is a way that I can participate. And I started with just small amounts of money. You can start with $1,000 or $5,000 with REITs. EJ says he's interested in lease purchasing multifamily. What does that mean, EJ, if you want to jump in here?
So lease purchasing is similar to lease options, where you put a down payment down or a option fee, and you can carry it out for whatever term you and the owner want to do it for, 1 year, 3 years, 5 years.
Yeah.
And then at the end of that term, you have an option to buy the property. Ideally, you want to buy it for today's value, or today's value, add value to the building, whether it's increased occupancy, lowering expenses, whatever it takes to increase the NOI. And then by the time you go to sell, it's worth more than what you bought it at.
Sure. Value add. So is this something you've done or you're looking to do?
No, this is something that I've learned. It's something that I'm trying to get into to do. I have the knowledge, but I'm looking for basically a money partner that can basically put down the down payment, and then split the upside.
And where'd you learn this? Is there a particular program you've been involved with, or?
Right. So commercial property advisors. So Peter Harris and Peter Conti.
Peter Conti. Okay, good. So
Commercial Real Estate for Dummies. They wrote that book.
Beautiful. So my teammate, and Patricia and I worked together, our teammate Annabelle Pacheco, who we launched this call for originally, she did that. She found a property in Texas. She's an agent in California, part of our team. But she wanted to do business in Texas. A lot of people like me don't like to invest in California real estate. And she spoke Spanish. She's a native Spanish speaker, or I should say, grew up speaking Spanish, fluent. So she went to Texas, to an area that was more Spanish speaking, found a property, found an owner. Property was off market. He carried a substantial amount. They put up a modest down payment to tie it up. She got bank financing to do a value add and flipped it about 2 years later and netted, I think, $1.5 million profit in about 2-3 years. So what I'll say to EJ is, if you find a deal that you think is a good deal, I'll help you find the money for it. There's money for deals. The money is made by the person finding the deal.
Right.
People who lend money, there's lenders, there are employees that do that. There's good employees, there's great employees that make a lot of money lending. But that's not the magic. The magic is finding the deal. It's talking to the owner, getting a property under contract, and then scrambling to find the process. And so I'd say if you find a property, you can get tied up. So if you reach out to me, or the author of this podcast is Annabelle Pacheco. She's done it, depending on where you are and where you do the property. But our goal here, this call, is to create a national network of people like you who find deals, and like me and Annabelle and others who finance deals and put us together and let's make some money together. That's what we're here for.
That brings me to my next question. The people that you will bring to finance these deals, are they financing 100% or are they looking for down payment?
Nobody finances 100% of something unless it's 100% of 80% or 70%.
Right, okay.
So sometimes you find somebody who put the money up because it's such a good deal, and they'll help you get it closed right away. Like when I find deals for myself or client, I'll find deals sometimes that's so good that the investor will pay the 100% of the purchase price because you're buying at 70 cents on the dollar. But it has to be that good a deal to get 100%. More commonly, in this competitive market today, to find deals, you have to find a partner to split. Somebody brings some equity in, and then they'll also help you qualify for the financing. And what I would say, if you haven't done any of these deals yet, that's part of your education. Like I went to college, they charge tuition or you get a scholarship. So if you find a deal, you're not paying for education. That's kind of like your scholarship money. You're going to learn, and if you make some money, that's a benefit. But I would say, prepare yourself for your first couple deals until you find good vendors, good partners, good money people that you have to probably share a deal with a couple people. And that's the nature of real estate, that the teamwork makes the dream work.
Gotcha.
Okay. Does that help a little bit?
A little bit.
That's not what you want to hear, though. You want to hear, yeah, I'll hook you up, I'll give you 100% financing, and you make all the profit.
Well, no, I never planned to make all the profit. I planned on splitting the profit. It doesn't matter if it was a 50-50 split, 60-40 split. I don't mind giving away most of the equity. But the main thing is I'm looking for 100% financing because I seem to have a bunch of knowledge, but no money, no credit right now.
I don't think you have to have the money. If you find the deal, there are plenty of people who will give you credit for bringing the deal in, and they'll put up the financing and they'll bring in the equity and give you some of the money. I would, if you find a good deal, I would give you 50%. Hard to say. It depends on what's in the deal. It depends on what you're bringing. It depends on what you're bringing to it. If you're bringing a deal that's tied up under contract, yeah, I don't have it otherwise. And if there's a pathway to make money and protect myself, I would do it. Then there are people who will. So it depends on the deal. Okay.
Gotcha. That's what they say.
It always depends on the deal. Good. EJ, where are you at? Where do you do business at?
I'm in LA, but I'm sourcing deals nationwide.
Nice. Very good. Well, I'm in LA as well. So, and by the way, for anybody who's in the LA area, next week on Thursday, the second Thursday of every month, is the LA Real Estate Investors, LA County Real Estate Investors Association. It's a free event, second Thursday of the month, next Thursday, a week from tomorrow. It's in the Culver City area on Motor Avenue, LAREIC.com. Free event, free parking. If you can get there, there's about 50 vendors, 250 people there, a great speaker. Kathy Flecky is a speaker. I just interviewed her. So if you're in the area, I'd love to see you, maybe meet you. I'm the official podcaster there. So if you're there, come up and say hi, okay?
Where are you not, Bill?
Where am I not what?
You're everywhere. So when you said I'm the official podcaster, so where are you not?
For everybody, you know this probably, Patricia. I'm a Grant Cardone 10X guy, and I have to be so out there that people either love me or hate me, but at least know who I am and either choose to business with me or don't. So yeah, you're going to see me one way or the other. I'm going to be out there. But yeah, definitely, I think in this, especially this market now, last few years, you can do almost anything and get attention and get some business, but this is coming back to a normal market that you got to be all over the place to generate some business. So, but thank you.
Mhm.
Yeah. Okay, good. Hey, thanks, EJ. Appreciate it. Nice meeting you.
Likewise.
Anybody else have any questions or comments? Jasmine, I see you snuck in a little bit along the way. Hi, welcome to our call. Steffi's a wholesaler in the Bay Area, and who else? Jasmine, to be fair, put your contact info in the. If you want to put your contact info in the chat box, if you're in the business or you have something to offer, I'd love to meet you and do some business with you. Andy Suarez, welcome as well to our call. I'm not sure what you do, but I'd love to have you. You're you're a wholesaler, off-market properties in LA, Orange, and San Diego. Great. Hey, Andy, I'm in LA. Love to see the off-market properties in the LA area if there's anything of any value. If you have it under contract, in fact, if you get a deal under contract in LA, I'd be glad to put it on this show, or I do another one on Tuesdays that's on real estate investing as well. And then also, reach out. I would invite you to join us on a week from Thursday. Dustin, as well, as a LA-based investor. Welcome. A lot of LA people here. Well, I'd love to have you join us all next Thursday at the LAREIC.com. I'll put that in the chat box.
Bill, that's not the one that's near, that's not the event that's by UCLA, is it?
So it was 1 month at UCLA. It used to be at the Olympic Collection in West LA. That closed down. He held it 1 month on the UCLA campus, which I don't like to go to. I hate going there. I'd like to burn the place down. It should be made into condos. And then after that didn't work out, thank God, he's moved it to, of all places, the Ayman Center Cultural Center, which is a Muslim center. I'm a religious Jew. I don't like to go out at night, but I go out at night. I don't hang out at the Muslim center, as you can imagine, but I go to this event because it's that good. And by the way, the people treat me fine, so I don't mean to make fun of the Muslim people. They're very nice, and it's a great venue. So, but that's the second Thursday of the month. It's a monthly event, and it's free. If I didn't mention that, It's a great place to meet investors, wholesalers, and vendors, lenders, and investors, and inspectors, and investing coaches and such. So, and he says he'll be there. Good. Hey, Andy, come up and say hi. I'll be the official podcaster, and please come up and say hi, and let me get a chance to get you on camera a little bit. Okay, that's all I had prepared today. Were those statistics helpful in any way? Interesting.
I think so. And also talking about the REITs, I had done some research on that in the past, sometime last year, and it was something that I wanted to get into because I felt like it was, very low risk, especially if you don't have a lot of money to invest right now and to maybe finance a deal, but you can just start with a REIT investment. So that was really helpful today too.
I like to invest where I feel like I have a little independent knowledge. And so, for example, the REIT that I picked, of course, technically I'm not an insider. I don't know that much about the company. My brother-in-law doesn't talk about it to me, but I do know him and have great respect for him. Whereas if you're just somebody looking at a bunch of papers, you don't know them. I also know their strategy is Southern California, which in general, I would never invest in real estate in California for residential property. But I think our economy is continuing to grow the number of people, and so industrial property will be in need. And value add is the nature of taking something and fixing it up, and he knows how to do that. And so I think that I try to use my knowledge to be successful in my investing. And while REITs aren't like a traditional real estate deal where you're buying the deal, to some degree, I want to play to my advantages when I invest money. So,
Right.
Yasmin is in Houston, Texas, single family, but wants to expand into multifamily.
Yes. Hi, how are you, Bill?
Fantastic. So tell me, what part of Houston are you in?
Pasadena. Are you familiar?
A little bit. I know where it is. I know there is a Pasadena, Texas. I know that. And I think, do you know who Grant Cardone is?
Mm-hmm.
I think when his project, I know he's got one in Houston. I think he's also in Pasadena, no?
Not sure.
Yeah, but he's big in Houston. Great market, great real estate market.
Yeah, so I started doing wholesaling about a year ago, and I've had a couple of deals, but I am starting to see the bigger picture isn't in single families. I mean, not saying that there isn't a return on investment. Of course there is, but definitely expand or accelerate multifamily is the way to go. So this is actually the first meetup that I'm joining into a multifamily. So it's new, and
Okay.
Yeah.
Well, I think there's a whole range of meetups in multifamily, and there's a lot that are oriented towards syndicators, if that's where you're looking to be. There's some that are oriented towards passive investors or limited partners. That's what I go to some of those. I think our focus is more for business people, for agents looking to add this to their portfolio. I'm a successful real estate agent in LA. I have clients who are looking to invest money, and I want to be able to offer them opportunities, some of which I don't participate in as an agent. I just introduce people, and some I will make some money in. And then I'm also interested in looking for deals for myself to invest in. So if I find a good, project, I look for properties in Texas or Florida, 200 units and up, established team. But I'm definitely looking to invest more money in a couple more projects that meet that criteria. So I'm always looking for a good deal. So if you get something put together, Jasmine, please come back and let us know about it.
Yeah, so that's
You
my
said
next.
Texas and Florida.
Personally, Texas and Florida, yeah.
How
'Cause
many
I go-
units?
200 and up.
You
And
buy
that's just because
hotels?
I'm sorry?
Do you buy hotels as well?
I don't.
Okay.
I don't. I'm looking to just be a limited partner. I don't buy them. I'm just a limited partner looking to invest in partnerships where they're managed. They have the whole project. They're going to do a value add and then manage it up and rent it out. And I'm just looking to be a little piece of the whole puzzle there. I'm not looking to run the whole thing myself. So
Gotcha.
my business day is pretty wild, and so I need my money to just quietly multiply without my paying too much attention to it. Now, my business is residential housing primarily, though I've done some commercial. In fact, Patricia and I work on a deal on a restaurant that I listed and she sold. So, but most of my business tends to be residential. That's my day-to-day business job, or business, where I make my money. And then I make more money than I need, and the excess I invest. And I like to invest in multifamily properties.
Okay.
Cool. Well, Jasmine, we won't see you in LA next week, unfortunately. But
When-
definitely.
Family over there. I was born over there,
Where?
but I've been raised here. Lakewood.
Lakewood, California, right near where Patricia is. She's the Queen of Downey, which is like next city over.
Oh, nice. Hi, Patricia.
Yeah, hi. Yeah, I love Lakewood. It's such a nice area.
It's nice. It's not as nice as Downey, but it's a really nice area. Downey is the Beverly Hills of the 562.
That's right.
Lakewood's kind of like the Brentwood or West LA part.
Yeah, nice area though.
Very nice. Cool. Okay.
Bill,
California.
is that event live streamed? The one that you're going to be doing the live broadcast? Because I've seen the Facebook broadcast that you do, and then it cuts out because the event starts. But does the event get broadcasted as well?
No. And the only reason why is because it turns out Thursday night, my wife and I babysit our grandson, and I leave at 7:30 to be home before he goes to bed to see my grandson. If I was younger and had nothing else in my life, I would stay there through the program, and we live stream it. So if there's anybody who's interested in staying through the program and kind of overseeing the equipment for me and stuff, I'd be glad to talk to you about staying on and live streaming it and maybe talking about it in the middle of it or something if anybody's interested in being a commentator or whatever. But yeah, no, I leave at 7:30, so I take my stuff and go home.
Okay.
I think he'd like to live stream. I think it'd be good too. I think it would be good content, speaker especially.
Mm-hmm. Yeah, I was thinking that would be perfect for people that are out of state, like Jasmine. They
Yeah.
could be
Yeah.
listening to all the market information that's happening here in LA.
Well, the speaker in particular this week that we're having is Kathy. She does multifamily investing across the country, and I think in Texas. And I think they just did a. Hold on, I got the wrong page. I think in particular in Houston, if I remember correctly. Let's see. Here is the speaker, Kathy Fetke, and she talks about specifically buying and hold cash flow properties, and in particular, I think they do Texas. I know they do Texas. I'm pretty sure it's Houston as well. So you might want to check her out. Look, there's a lot of people, a lot of coaches.
Mhm.
I I've met her. I like her. I can't say that I've used her, learned from her, and as a result, invested successfully. So I'm always hesitant to be too aggressive in referring somebody. I also think that, every coach has a different flavor. You have to find one that fits for you. I also know, as Grant Cardone says, that if you pay attention. Sometimes people, you can do a lot of free seminars and webinars, but they don't really get you into action. Once you start paying money, you start following through on things. So anyhow, I think she's great and really smart lady and seems real integrous, but I'd say check it out.
Great, thank you.
Sure. Okay. So any other questions? Any other comments? Anybody else want to say any other needs, wants, successes you guys want to share with us?
Good for now.
And there's Amy, Annie Riveron is a financial advisor who invests, and she's out of Temecula. So Annie, thank you for joining us in LinkedIn. And if you're a financial advisor, you might want to talk about, I don't know if you're in a position to do that, put together a few REITs. I'd love to interview somebody who's a financial advisor and maybe have a different selection of industries, REITs that people can invest in. Like I said, I participate with Rexford, which is industrial property. I know there's a whole smorgasbord of REIT opportunities. So if that's something you're interested in, Andy, please reach out to me, and I'd love to talk to you about that at the right time. So let's see, and I see they're jumping at the end. William Holmes, welcome to our call. Kind of last minute, getting ready to wrap up. I think that's it. I think we'll wrap up today. Patricia, anything else you want to add?
Yeah, I just wanted to say, right now the market, it's shifted already, and we're still seeing some other transitioning where it's like settling, but the market it's busy right now. And it's, a really great time to look at what you want to invest in, even if it's just starting off something smaller. Maybe you're not looking at the REIT. Maybe you do have opportunity to maybe just buy a rental property and hold on to it for the long term and build on the equity there. So it's a really great time to look at what, you can afford. And, maybe talk to Bill or Annabelle about investing in, in some property. And Annabelle invested out of state, so she's an expert there. She invested in Texas, large apartment building. So, this call is meant to be supportive. So definitely reach out with questions that you guys may have. And, it's free information, free education. So take advantage of it.
Fantastic. Okay, love to connect with you guys on Facebook or LinkedIn. Esther Jasmine, it was nice meeting you in Houston. Thanks for coming in. Come back and play again next week. We do it every Wednesday, 2 p.m. Pacific, 4 p.m. Central Time in Houston, 5 p.m. Eastern Time. We live stream on Facebook and YouTube, and love to have you guys participate. Thanks so much, everybody. Have a great week.
Thank you, Ben. Bye,
Bye,
Patricia.
everybody.
Bye-bye.
Thanks so much, everybody.
Have a good one.